Bulls and bears continue to fight it out. A victor is coming soon, so says the charts. Stay tuned, we'll discuss this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, as always, don't forget, you can click show more on the side there. I'll give you additional information and links to today's video. Also, if you find this video of value, please do consider subscribing. First up, we have the numbers, week ending 3/16, and as expected, the NASDAQ continues to be the big winner year to date, but smalls are starting to show some life. Next up, let's go to the big charts. So, although I do not like showing such a short time frame, we have talked about the fact that dumb money buys at the open and smart money buys at the close. And if you look here at each day, at the end of the day, you see a surge in volume. And last week, we had an article here in the journal talking about just that. So it is interesting. You know, we generally wait till after 2 o'clock ourselves, get a good direction on the market. So year to date, what is the picture right now? Starting at the bottom, volatility. Still above 15, okay? So a little bit higher than normal, about 50% higher. We'll talk about that. Next up is MACD, momentum. Kind of just meandering along right now. Not a lot of momentum here in the market. At the top is RSI, relative strength. Same thing, just sitting on the line there about 50, not going up or down. But the middle of the chart there, the meat here, what do we see? Well, we talked about this last week. We got above our most recent high of 2780 on a close on a Friday. Unfortunately, we failed there. So we have come back last week, but this is why I love the charts, technical analysis. I'll have Michelle zoom in. I mean, we closed right on the 50-day moving average there on Friday. So it shows you where that support is. So what was once resistance now becomes support. So again, another week where kind of no direction, we're in this trading zone and we're looking for a breakout or breakdown. And what do I mean by that? Well, at the beginning of the video, I said a victor's coming, and you can look here. This could be two things. A pennant, which is usually short time frame. Really, it's a symmetrical triangle. And obviously, you see the top, the bottom, and where we are, and eventually, there's going to be a resolution there. Somebody's going to win. Now, the charts do not tell us who is at this point, but we're going to break out of this, or we're going to break down from it. And it's coming soon, no doubt. So right now, short term, our indicators are still positive, but we are being cautious with new money. Next up, weekly, our midterm charts. What do we see here? Well, a couple things. I added on the bottom another signal, PMO, Price Momentum Oscillator. Woo, that is a lot of words there. On top of that is MACD. Basically, what it shows you is that we have two negative crossovers here. So again, confirmation, so conflicting information on the daily chart. And then the big thing is, you look at the channel. So yes, we're still in a bullish uptrend, but look how tight that channel has become. We have our bottom, which we bounced off of a few weeks ago, but look at the top channel. We broke above, and now we're back in it. So again, a resolution is coming here. We'll see if we have it this week, but for now, midterm is in fact positive. And then we go to long term. Monthly charts, as expected, we are positive on our long-term charts as well. So how about market breadth, where we are right now? Here's the companies above or below the 200-day moving average. Not much movement last week. So if anything, that's a good sign, kind of sideways. On the 50-day moving average, those companies above or below. Remember, above 60% is bullish, below 40 is bearish, and this week we did have some decreasing across the board. S&P down to 59, NASDAQ, we're looking at 65. Okay, and then we've got 61 and 65 for mids and small caps. So surprisingly, they're the more stronger sectors right now. So for now, again, we're hanging in there, but really directionless across the board. How about the Dow? Same view as far as the symmetrical triangle. Again, we're going to need a resolution, except here you see it, we're very close at the bottom end to breaking through on the downside. Dow just barely up year to date. So continue to watch that. And NASDAQ. Yeah, last week we talked about a good move to the upside. NASDAQ broke above its all-time high, but it failed this week. So we've come back below our retracement number there. So let's see what happens. Still strongly above the 50-day moving average. But let's see, this might just be a consolidation. Not uncommon when you break out like that to pull back a little bit, consolidate before continuing on. Obviously, the rest of the chart looks pretty good at the bottom. We have momentum pointing up, relative strength. Yeah, we came down at the end of the week, but we've got room to run. So let's see what happens. It's been all about tech year to date. Tech is driving this market, and we'll show you that here in a second when we get to the sectors. So here's the sectors. I changed it a little bit this week because I took the top 5 sectors of the S&P 500. This represents 76% of the S&P. And obviously, the NASDAQ is the biggest portion at 25%. Because we are, right, we're weighted based on company side, and big tech, of course, is the overweighting there. So year to date, it's bringing up the S&P. The rest of the sectors, financials, pulled back last week. Health looks pretty decent. Pulled back a little bit last week. Consumer staples, consumer discretion, still strong year to date, but pulled back in industrials, pulled back as well last week. So deterioration across the board. Obviously, you want everybody to participate in order to see this market go higher. Next up, we're going to talk about international, something I haven't focused too much on this year. We got plenty going on in the U.S., but we've got some breakdowns. Here's the German DAX. I looked at it last week. We're right on a death cross, a 50-day moving average going over the 200-day. You see my arrow, and I have Michelle is going to point that out. But this morning, down another 1% and 5.2% year to date. So the German DAX is not looking good. The Nikkei, same as the U.S., although down year to date, and then we're kind of meandering along, but really a slope there at the top on your moving averages. So again, we'll continue to watch this. And next is emerging markets, below its trend line. So again, international has not been too strong this year, whether it be emerging markets or some of the other plays that we do look at. So what's on my radar? Well, right now, let's go back to what I talked about last week. Crude oil, WTIC, okay, we looked at a consolidation and a possible breakup. Remember, we've been in this year to date. It has pulled back. So for new money, I'm looking at this. I've stayed in it, okay, and if you look at Friday, we had a nice surge, almost 3%. I'm looking to get above that 50-day moving average, and hopefully we can get ourselves back on a good track there. Next up, biotech. We talked about this last week. Been pretty strong. Did have a pullback last week, so did not add any money into that sector as of yet. So next up, treasuries. We've been talking about this for quite some time. 10-year treasuries minus 2 years. That's yield spreads. Okay, we went down big time this week to 0.54. And you can see it on the short end. The 2-year treasury, the blue line, is really moving up. So that's an issue. Okay, we're not inverted, obviously, but we continue to weaken here. And I'm really concerned about this. I think we have two things. 10-year came back a little bit last week. We're looking at that 3% on the 10-year and about 3.22 as critical areas on the 30-year. So bonds continue to be a concern so far. So what keeps me up at night? Well, look at this. First off, a lot going on, a lot moving, but we hit $21 trillion, okay, in debt last week. I mean, nobody's talking about this. It needs to be addressed, and obviously with the new tax plan, we're just adding more to this, and it's really, really concerning. So next up, when I look at things, volatility. When you look at volatility, we're holding a long-term trend line here, and last week, David Rosenberg, out on Twitter, good follow, he brings up the point that for the first time, when you look at it, the VIX has averaged out more than 50% higher than 2017. The last time that's happened, 2008. So volatility is obviously back, and we continue to watch this. And then we look at GDP. Each month, we've seen the Fed come down and go lower, lower, lower. Okay, and obviously, when you look at overall, let's look at GDP growth with Japan and the Eurozone, all going down. So a lot of this is of concern to me. So wrapping things up, this week, fear and greed, 19. A little bit more, we've got that calculation below. Okay, so right now, again, our signals are positive, short-term, mid-term, and long-term. But again, I'm going to bring back my most hated terminology, staying nimble. I think that right now we see it. The market does not have a direction right now, so we're just waiting to see if we find one. Thanks so much for watching. This is Michael Loftus for Wealth and Wisdom TV.